There we go. Turn the mic on. That might help a little bit better. So welcome everyone to Trading Coaches Playbook. My name is Brandon Wendell and hope everybody had a good holiday. Welcome back, everyone. Welcome, Brandon. Welcome, Stephanie. Welcome, everyone. And so getting back in the swing of things, at least for one day before we go into the weekend. And I'm actually going on vacation next week too, so that'll even be better. But yeah, so before we get started in Trading Coaches Playbook, just need to give a quick reminder that we're not broker dealers or investment advisors. We're going to look at this information from an educational standpoint, but not telling you to buy, sell, or hold any particular security or giving any personalized recommendations about the markets. All markets do involve risk of loss. This is always a situation as we can never eliminate risk. We just try to minimize it. We're also not subject to trading restrictions here, so we can have a position in a security or initiate one at any time. And let's see what else we have. Oh, that's about it. So I didn't have an official title for today. So basically what I'm going to be doing is kind of taking a look at the broad markets. And if you guys have any questions about particular securities or want me to look at something, I can definitely do that. I was going to kind of do a broad market overview. And are we having E-mini while I'm on vacation? We're going to be off while I'm on vacation. So yeah, I don't think anybody else is taking it over. I don't know. I didn't see if anybody was available to. I probably could have, but then again, if you end up liking them more than me, then they'll get me in trouble when I get back, right? Anyway, I don't know. Excuse me. But let's see, where was I here? Yeah, so yeah, the E-mini think tank. Oh, thank you. Not possible. So yeah, Monday Wednesday is when I usually do the E-mini think tank. As you can see, that's from 9 a.m. to 11 a.m. Basically, what we do is we trade the futures markets or observe what's going on in the futures markets in live environment. And, we'll go ahead and, like I said, jump out and take a look at that. And let's see what's happening with the rectangle and SPY. Well, basically, it's kind of a holiday slump that we're in right now. If you go out to say it, you're talking about like how we're not really going anywhere right now. On the daily chart, we're kind of pressed up against the price here. Okay. Today's settlement, I do believe the options are going to settle early with the close because they're always. Sorry, Lucy was begging to get up in my lap here. She does it every once in a while. So say hi, Lucy. Yeah, she doesn't care. Anyway, 5-minute chart for the rectangle. So basically, yeah, the time of day, we've got really nothing going on and we have an early close. So when you take a look at the smaller time frame here, you can just see consolidation. And basically, I use this RSI. And remember, I talk about the RSI heavily in the E-mini think tank and how to use it properly. I'm using this as a momentum indicator. So I don't know why mine never shows the inputs, but it's just the regular 14-period RSI. And I use 60 and 40 for the overbought, oversold. Okay. And basically, what it's showing me right now is we have no momentum either direction, and that's what you're seeing with prices going sideways. There's just no momentum. We're caught in a range because of the kind of the lame week, the holiday week. So there's not much going on, and with light volume and very little momentum, we're not going to go anywhere. So we had a little bit of movement early in the week. Actually, not early. That's Wednesday. I guess actually Monday we did too. And there were some opportunities intraday, but today it's just it's not really good trading. It's a holiday. It probably end up settling right around this 454 area. So the reason I say that is it's not really a great demand zone, but that was the origin of some buying pressure on Wednesday after the dip. So it doesn't really look like anything's going to happen until the beginning of next week. As far as where you can find these recordings for the Trading Coaches Playbook, they're going to be available on our YouTube channel. Yeah, we actually have a channel, Wealth Builders HQ for YouTube. And what you can do is if you go there, you'll see Trading Coaches Playbook is one of the channels. It's under our page. Anyway, hi, I know. Don't worry, I'll give you attention. Anyway, so getting bigger picture is really kind of what we need to focus on today because day trading is, well, again, we're closing kind of early. So yeah, with settlement, today's options, I don't know if there's going to be a good options trade because again, it's closing early for the market. I should probably put that out there. My other my other tool that I use or have for my students is called the SPX Cash Flow Secrets. And basically what we do is we take a look at opportunities to generate income on the S&P 500 every single day. So there's a link there for that if you're interested. And basically what we do is we sell options outside of supply and demand zones every single day and collect income. And it's been doing pretty well. You know, if I go, let me see, I do have Excel. Man, I got so many things open right now. It's a busy day. I know there's not heavy trading going on. There's other things that are going on in my life. So let me see here if I can open up SPX cash flow for November. And right now for the month of November, doing pretty good. You know, we had a loss, but overall 93% win rate going into, and I did not include Wednesday's trades yet. So I'm missing one day, I believe. I'll have to update that. But yeah, I mean, that's what we do is we basically put in a trade in the afternoon, you know, with roughly 2 hours left until the expiration. And, you know, if it expires, we get to keep the cash. And it's not huge amounts, but, you know, it builds up. And that's the key thing is building it consistently. So yeah, getting back to the question, that is going to end early today. So therefore, I don't have a trade for us because we're already actually past when I would normally put on the trade. So if we take a look, let's see. There we are. My Thinkorswim is open. Trade. Use the double bond for an area opportunity. Okay, good. Yeah, if you got in, that's great because like I said, I'm a little bit late right now and I totally forgot about that. Actually, I'm not even getting pricing. So I'm not sure what happened there for these that expire today. Oh wait, that's showing iron condor. Let me just do single. There we go. That's better. And if I do vertical, you have pricing. But yes, the close is early today. So even though the expiration is coming up, it should expire, like I said, at 1 p.m. Eastern rather than 4 p.m., the typical close, because of what's going on with the holiday. We have an early close. So looking at the market right now, we really don't have great zones, although 45.70, and well, this is a tested zone, but could end up holding price if we stay in that sideways range. We're looking at 45.45. So if we go to 45.70 and selling calls above that, you can see there's no premium right now. Anyway, it's too late. And selling puts below, again, there's no premium at this point. So you had to do it early today at about 11. Yeah, you said 10:55, you did some and did some at 10:30. That's a smart thing to do. So, and I didn't today. Yeah, it's okay. You know, there's still other opportunities next week for the end of the month. And of course, going into the next month, there'll be more opportunities as well. But yeah, it's just simply looking for opportunities where the prices are not going to go. And you don't just have to do this on the SPX. I mean, I do it on the SPX for certain reasons. The options on the SPX are index options. First of all, you've got options that expire every single day. You look to next week, Monday, Tuesday, Wednesday, Thursday, Friday. So you can, the opportunity is there pretty much every day. Do need to avoid this, AM expirations. Do not trade those. I'm not even sure why those. Basically what happens is they stop trading on the evening before, and then the next morning, whatever the opening price happens to be for the index, that's the settlement price. Well, that means that if you go to bed at night thinking you won, you wake up in the morning with a loser. You know, and last time that happened to me was probably in college when I was drinking. And no, just kidding. No, you know, basically it's a catch because it could work in your favor if you get a gap in the right direction, but if you get a gap in the wrong direction, then of course, you know, you're in trouble, and that's nothing you can do about it there. Okay, good girl, get down. You're just gonna stare at me again? Okay. So yeah, basically what I usually do is I look to sell options. Part of the reason why I sell options is, again, there's more opportunity. Looking back here, if I were to buy an option, I need to go in my favor quickly enough before the options, because you have time decay. When I'm a seller, net seller of options, first of all, time decaying is my friend, for one. And secondly, yeah, she wants to teach the class today, exactly. But secondly, I have the opportunity of profiting if prices move in my favor, or if they don't move at all, or even if they move a little against me. So I'm definitely more on the sell side of options than on the buy side. This I gotta get rid of. This is another indicator I was playing around with, but oh well, no big deal. So anyway, like I said, the overall broad market. And like I said, if you want to learn more about how I do the spreads in the programs that I teach, I have all the documentation for it. You know, I teach you how to do those things. And of course, with the SPX program, actually, typically, except for today, I forgot. I'll be honest, it's on me. Excuse me. But what I typically do is I put out a recommendation or an idea of where the markets are going to go and where the zones are. So I log in here and go to my members section. And like I said, if I go to SPX, cash flow secrets, click on that. You can see that I've got educational videos on trends and the actual strategy, even vertical spreads, how to trade using certain platforms like Thinkorswim or Tastyworks, how I do that, how I find my zones properly. So you learn everything. I'm an open documentation that goes with it. And then I sent out those messages. So, these were the messages last week, or not, I'm sorry, earlier this week before the holiday. And, the SPX closed and we got a profit. So it's interesting, though. I'm finding supply zones from July 31st that we have to use because we have a rally that we haven't experienced in quite a while. So anyway, like I said, if you're interested more in that, you can learn more by joining that link that was the SPX Cash Flow Secrets. So back to the broad market, I'm going to actually use the futures because that's why I trade often. And let me clean this up. And basically, before I get to this chart, I want to go over to this one. And this is a comparison chart, although it's not right here. There we go. Now it is. This is a daily chart that's comparing, as you can see, the 4 futures markets, the index markets, the ES, NQ, Russell, Dow. And the reason why I wanted to bring this up is if you take a look from the rally that we had, was it October 27th? It's one of the bottoms. Usually what I do is I try to pick out a major high or major low and do the comparison starting there. And the reason why is because I want to follow the leader. Whichever index is really leading us is going to be dictating when the markets are turning. So, if I go show an example of this in the past, let me see if I, whoops, wrong one. Actually, yeah, let's do that. If I go to my charts here, I'm on the ES, so let me go to a daily. And you can see why I chose October 27th. That's the start of that rally. So if I go back to the peak back here, where we started dropping perhaps August 1st and do a comparison there. And I've done that before, as you can see, it's on my screen. Oops, gotta see the hard right edge here. There we go. And now everything's starting on August 1st. When we were dropping later to the downside, happened to be the Russell. Yeah, I see it's that green, the Russell, that was the weak market. And what happens is everything was being dragged down by it. But when the Russell finally started making higher lows and then higher highs, these stronger markets actually took off pretty well. And that happened right here on the 27th of October. So from that time, you can see, yeah, the Russell actually did gain 10%, but the NASDAQ gained 12. 2.25% was because it was the strongest market. So if the NASDAQ is currently the strongest market, we want to be going long on that until that leader gives up. So instead of starting off my analysis here on the ES, I might actually go to the NASDAQ. And, oops, I was doing some teaching there. Look at this. We are stalling out at a daily supply zone right now on the NASDAQ. And if we look a little, and I use this RSI as a momentum indicator, we actually have lost momentum this week. We have what is called, it's not really a negative divergence. I mean, it's just the end of the move. I suppose we're stalling out. A negative divergence would mean there were 2 peaks making higher highs on price, but lower highs on the indicator. We don't actually have that. But we are definitely not in a bearish trend anymore. I mean, you can see, obviously, a bearish trend first would stay below them. But also, you have to have lower highs and lower lows. Well, we made a higher high here as we broke out. Okay. And also we're in bullish territory according to my RSI. So what I'm expecting is either a sideways kind of a, I hesitate to call it a pennant because it's not quite. You look at this and you see the consolidation that's going on. So we have this maybe a pennant where we're going to break out, or we could experience a retracement. And if we do retrace, Now, the first logical pullback point would be this buying pressure origin about 15.6. That is if the price wants to pull back on the NASDAQ. As you can see, we're struggling a little bit to break out the new highs, but it doesn't mean it won't. It's just doing a little struggle, but that's also partially because of, right, we're in this kind of light volume week for the holiday, and next week we start picking up again and start moving. So yeah, I could also take a look perhaps at the weekly. Actually, I want to go, use what's called a continuous chart on the weekly. You can see that we had that correction here. Now we pulled back. Not sure if that was a demand zone on the continuous that we pulled back to. It must have been. Obviously, we're breaking out. If this was a pennant, well, it looks as though we started up here for our pull. That usually gets duplicated. Let's do it this way. That move. And that would take us over 17,000 on this current move. So even on the weekly, we're not really seeing much of a pullback at all. We are seeing some weakness coming into the NASDAQ. This is not as accurate when you're using these continuous contracts because, you know, you can make adjustments. This one is back adjusted for the contract changes. This one is not. And you can see that actually shows prices higher. That's incorrect. You got to be careful. So it should be back adjusted. Did it go? What happened here? That way you get more accurate data. Oops. Okay, I apologize for that. I'm not sure what happened. Huh. Very weird. And let me see, share my screen again. And we're so rudely interrupted by internet getting kicked off or something. I don't know. Anyway, so yeah, we were talking about using the corrected charts. And this one should be adjusted now. Yeah, there it is. So anyway, it looks as though we've got a possible continuation actually up over 17,000, believe it or not. So the NASDAQ is strong. You know, and again, going back to specific, dropping down to the daily. Actually, I want to see on the week. It lets me, there we go. And again, I want to do a couple things. I want to do what's called a projection from the last impulse. And look at that. Wouldn't you know, based on the projection, we're actually at a stalling point that we should be expecting. Right there, 16,117. Hang on a sec. There we go. All right. Everything's right here. The chat going again. There. Okay. Yeah. Computer's a mess today. It still wants to be on holiday, I guess. Anyway, you got a projection based on the previous impulse, and you can see we're at one measurement, the next measurement just a little bit higher up there as well. And then going down to that daily time frame, if we do correct, actually, I'm sorry, I want to stay on the weekly for a moment, because also if we're trending on this weekly, I use the Fibonacci retracements. Potentially we're going to get pullback points. And you'll notice I'm not actually starting at the absolute low. I'm starting at the origin of the bullish move. And you can see that my retracement of 38% is pretty much right in that demand zone that we just mentioned, or I mentioned. So we've got this weakness coming at an area of a projection. So we should have been expecting it right around here. As you can see, that's the first projection from the previous impulse right here. There we go. Change the color so it's a little darker, and actually make sure we got the prices we can see. Yeah, 16,117. Where's the font? A little bit bigger. So it was right in that area that we should expect a stalling, and it's exactly where we're getting it. So it wouldn't be a surprise for us to pull back a little bit starting next profit taking. We're also stalling just near the prior high, and we have enough momentum that we could just break straight upwards without pulling back. And if we go down a little bit more into the 4-hour time frame to kind of fine tune this analysis, you could see that we have what is called a negative divergence. And this is probably one of the best signals that you'll get that prices are getting tired and getting ready to pull back a bit. So when you see this, prices are making new highs. And unfortunately, momentum is going the other way. You know, if you're making moves in a trend, you should be seeing prices moving in the same direction. And sorry, not prices, the momentum moving in the same. Am I losing volume? Okay, I don't know. I don't know what's happening. Hopefully my internet doesn't go out again. But anyway, when you get the prices moving and making new highs, the momentum should be behind it as well. And this is showing the momentum's not there. Also, volume's not there right now, obviously. So we're getting that pullback. It doesn't necessarily mean we're going to reverse. I would not expect this area to hold very well because we spent a lot of time there. So like I said, if we do get a pullback, and I'm not saying we are yet, we could just go sideways and then rally on Friday. But if we just happen to get a little bit of a sideways pullback, then we could just break out. If not, we are likely to go down to the 15,500 area, which is in this demand, and also the retracement area before. You know, when you're taking a look at some of these stocks, one of the things we also did in the E-mini think tank last week was we started to do some analysis on the individual securities that were driving the NASDAQ itself. You know, I was talking about following the leader when it comes to the broad markets, and that's why I was looking at, oops, wrong one, looking at that comparison chart, seeing who the leader was and when things were turning. So for instance, as an example, again, if we go back to the Russell, and I'll do a daily view on that. And like I said, remember, we bottomed down on October 27th, right? Let me clean this up. There we go. You can see we're in that nice downtrend. That's why I was doing the analysis on the NASDAQ. This was actually something I don't remember. I think mini think tank. I'm not sure exactly if it was or wasn't, but there was a possible head and shoulders. Obviously, we broke down and ended up turning. I think this is a weekly demand zone. Yep, look at that. So the Russell came down to a weekly demand zone, and that's where it bounced. Now, this is one of the weakest indexes, but remember, it was the leader to the downside. And when that leader to the downside hits demand, it turned around. Here's an interesting thing to think about, though, with this Russell. It didn't want to go up for two reasons. One, you know, we went and moved down the most. And secondly, you can see that we had a lot of bearish momentum. So typically, when you see a move up, when the price is that bearish, you will not make new highs without a major correction. So the Russell is kicking and screaming, being dragged upwards by the NASDAQ, but unfortunately, it's probably not going to last. And it's going to try to pull the NASDAQ back down. If the NASDAQ finds that weakness, this Russell will actually be one of the ones you want to short. And again, going back to that demand zone, as you can see, if I go down to the 4-hour time frame, look what happened here. We got the this is called positive divergence. That's why I was looking at the NASDAQ. We saw negative divergence on the leader, and we ended up with a pullback, right? Or at least failure to make new highs. Here, we're getting what's called a positive divergence, where we're making new lows without more bearish. Then we start making higher lows and higher highs. I don't know if there's anything I can do for the volume. Is anybody else having an issue, or is it just you? Nobody else has said anything, Brenda. I'm sorry. So I'm not sure. Anyway, like I said, yeah, nobody else is having issues. So right here, you can see we've got higher lows, especially right in here. We made a low where we're above 40 on the RSI and prices took off. So the same thing now is happening on the NASDAQ. Okay, yeah, other people are reporting the volume's fine, sorry. So right here, you can see that we've got the price to the upside. The indicator is not. This is on the NASDAQ again, and this is a sign of price weakness. Now, we have not made a high below 60 on the RSI. If we do, that'll be your signal that we're probably going to drop very well. If we don't do that, then prices are likely to just go sideways and start to rally. So that'll be one of the key things to look for. If we end up putting in a low in price above 40, look for the breakout upwards. This is on a 4-hour time frame. And in a high below 60, look for a price break downwards. So those are kind of the two things I'm going to be looking for to see which way the markets are likely to go. I'm sorry, let's check something here. All right. So that's what I'm seeing right now in the equity markets. And as I said, the NASDAQ is pretty much the leader. So whichever way this one goes, the markets are likely to follow the rest of those. And if this does show weak, where we either get below 40 or again, we make a high below 60 first, then look to short the Russell because that's the weakest index. You want to always follow that leader. So, and again, if you're interested in learning more about how I use that RSI, the way I'm using it here, you can obviously review a little bit of this video, but one of the easiest things to do is if you join the E-mini think tank, actually, I think I had it in the SPX Cash Flow Secrets, but with the E-mini think tank, nope, that's wrong. Nope, all the classes are recorded. It's under bonus videos. There it is. And I have things right there, RSI, and there's also a document that goes along with it. So, I teach all these strategies, and the nice thing is we get to employ them several days a week. So we get to see what's going on in real time as the markets are moving in the E-mini think tank. So that's what I'm seeing so far. Another thing that we can take a look at is some of the other markets. Again, if you got any questions of leadership and what's going on in the NASDAQ, one of the things I talk about is what's actually leading that NASDAQ. And if you take a look at, this is just, you can look at any website. I happen to use marketwatch.com. But if you go into the ETF, the E-mini think tank is 3 days a week. We meet on Monday, Wednesdays, and Thursdays. I think I have it. Yeah. It's Monday, Wednesday, Thursday, 9 a.m. to 11 a.m. There it is. So basically what I'm doing here is I'm looking at an ETF that tracks that NASDAQ 100, and it's called QQQ. So there's an ETF or exchange traded fund that follows all the different indexes. And basically it's going to be weighted in the same way as the index. So going down here to holdings, you can see that I have Apple is 11% of the ETF, and it's also about 11% of the index. So that stock has a lot of pull based on how much weight it is in the index. These indices are what they call market capitalization weighted. If you're not familiar, the only index that is still price weighted is the Dow. And what that price weighting means is stock is the highest price, has the most influence. That's what price weighting is. So when you look at the Dow, for instance, let me do this. If it lets me, where are we here? DIA. Oops. Can I open up a different one? No, it's going to open the same. Doesn't matter. But when I go to holdings here, you'll see that UNH, or United Healthcare, is the majority of that index, almost 11% as well. And that's because it's the most expensive of the stocks. The higher the price, the more weighting they have. But when you go back to the other indexes, like the S&P, or in this case, the NASDAQ, where was it? I'll just do it here. Those are market capitalization weighted, meaning whichever security is present in the most portfolios is going to be the one that has the most influence. And that makes a little bit more sense. Market capitalization, number of shares outstanding, basically tradable to the public, times the price. That's what market cap is. So Apple has a huge market cap. There are a lot of shares out there and they're very high price. So it should have more influence over what the index does. And Microsoft does as well. Actually, it should be Meta. Well, actually, they show Microsoft and Meta separate, don't they? Weird. Oh, no, I'm sorry, Microsoft. I was thinking Facebook. Yeah, that's Microsoft. That's right. Right. Yeah, Microsoft and Meta are separate. This used to be old Facebook. That's what I was thinking. NVIDIA, Alphabet, still has a symbol, Google, things like that. So the big weights are Apple, Microsoft, Amazon. So now what I'm trying to do is figure out, okay, who is actually leading us? Perhaps I take all of these and put them on a comparison chart and see which is the strongest. What's really driving that NASDAQ move to the upside? I'll pull this out of the way here for a moment so I can see those names. And where did it go? There it is. And now when I go back over to my chart, I could change it. Actually, let me see if I can do this. Add in a different one? No. Black Friday sales going on right now. I don't want to mess with that one chart. This one instead. There we go. And now, say we do Apple. And let's see, settings. Nope, that's not what I wanted. I wanted this one. And that's not what I wanted either. It's going to be a pain to try to change all that. Hang on, I'll just go back. Trying to make it easier for myself, but it's not working. All right. Actually, can I do this? Come on. There we go. A little bit of cheating here. Not really cheating. And let's say rename. No, I don't want to rename it. I just want to save it as a new name. No, didn't want that either. That's okay. Yeah, I'm not going to waste more time with this right now. I was trying to copy and start a new chart, but no big deal. I just don't want to have the numbers real small. Anyway, so right here, again, if I just do this, Apple, I can just fix this later. Now I can compare Apple. I'll make copy. Oh yeah, make copy. There we go. Thank you. That's what I was trying to do. So I don't mess up my original. Couldn't think of it, of course. So this is the copy now. Perfect. And here we go. Apple, Microsoft. Let's see. We got Amazon is number 3. It's a problem. I use too many different platforms. So there's all these little tricks and things you got to do on different ones. Anyway, NVIDIA is number 4. Add more, but those are the major ones. I guess I can add Meta as well. And let's see, it did that real skinny purple there. So we'll fix that. And there we are. So let me clear this. And again, October 27th is where everything started to rally off the lows, didn't it? So if we zero out there, we should be able to see which stock is leading us to the upside. And surprise, surprise, it's NVIDIA. NVIDIA's up 18.5% since those lows. So the leading stock of the leading index, again, just looking at the weightings here, you had Apple 11%, Microsoft, Amazon, NVIDIA. But the strongest one that's kind of driving this move to the upside apparently is NVIDIA. And when NVIDIA drops, which it actually started earnings, that's where we're now seeing weakness in the broad market. So going back to the individual stock, and it's 4 hour again, I'll go back to say a daily or even a weekly, just taking a look at the overall view, you can see that we were in a bit of trouble here with NVIDIA. Even before the news came out, and you see we have lower low. Technically, that's a bearish trend, right? It's not a very strong bearish trend because we're not breaking down below major lows and we haven't gone completely bearish yet. And there's a little bit of life left in this rally, according to the weekly chart of NVIDIA, as it looks as though we broke out of that downward trend. Notice, remember what I was saying about the NASDAQ? As long as we don't go below 40 or fail to make a high above 60, then we'll continue to rally. There, back up above 60 on this rally. So even though NVIDIA is falling back a bit, the fact that we still have plenty of bullish pressure says, and this was the leading stock in the leading index, lets me know that we are a higher probability of just going sideways before we rally again than we are to actually experience a big pullback. And break this down to a daily chart. And by the way, before the earnings were released, there was a warning sign that prices were getting weak. And by the way, they beat earnings. It's kind of weird that we're actually to move down on good earnings beats, right? They surprised by 65 cents or almost 20%. And then the revenue was even better by almost 12%. So it's interesting though, but the market kind of told us it wanted to go down, or I should say the stock warned that it wanted to go down before the earnings actually came out. And the way it did that was right here. Earnings were on this day after hours, but right here before they came out, you can see we were making those highs without the momentum present. That's a negative divergence I warned about. Next thing you know, we're getting a pullback. Yeah, this is RSI at the bottom. Just 14 period RSI. That's all. I'm showing it a little bit earlier. I don't know why it doesn't let me see the label there. I have it turned on. It's really weird. Values and status line, labels on price line, that's turned on. And when I go here, where is it? Scales. No, it's not there. Yeah. Indicator financials name, it shows it over here, the actual price, but I was trying to get it used to have the title or the name right there. I don't know why it's not anymore. Let's see, status line. Right there, indicators, titles, and arguments are selected. So we should see it here, but it's not for some reason. It's hidden. I don't know why. I haven't been able to figure that out. Anyway, but yeah, it's just an RSI, 14 periods. The only thing I modify is the overbought, oversold numbers. But like I said, there was a negative divergence before earnings even came out, warning we were going to get a bit of a pullback, and we're experiencing it. So let's see. Again, I usually go to the open, and you can see that we're pulling back right now about 23%. It doesn't look like we're quite done yet. And I would say that demand or good balance point may be back here at the 50% retracement, right around that 450 area, a little bit above 450, 455 basically. So we may not be done pulling back. And even if you go down to the 4 hour time frame, you actually see the weakness coming in again as prices tried to rally to new highs. Oops. It did so with less momentum. That's not sustainable. But, we may be saying at one of these retracement points before we actually get below 40, and the prices may try to rally. Excuse me. Sorry about that. I said it's been a busy day. And not even over yet. So anyway, that's what's happening right now on the equity markets. And I'd be keeping an eye on this as we're pulling back. What was the weak market? Apple was actually one of the weaker ones. Although if we measure from the highs, when we started pulling back, we have a little bit of a different picture. Nope, we don't. Actually, it's NVIDIA again pulling back. So since NVIDIA is now leading to the downside, when NVIDIA finds the bottom, that's where we'd be looking for a bounce. Does that all make sense? Just kind of following the leader. And you could do this pretty much with anything. Another way of looking at these markets, let me see, I think I saved this under my trading. Yeah. You know, every day you can kind of take a look at one of these maps of the markets. This happens to be a map of the market of the NASDAQ. And, you know, you can see the size of the box is related to its market cap. So this is a screener that I happen to find online. You can just do a Google search for them. Wow. Well, it keeps going in and out. This is finscreener.org. And this is a heat map of the NASDAQ. It's only one day, but I think I can change it. Yep. Look at that. Multiple years, year to date, all kinds of things. But basically, just today, we can get an idea which way the markets are going to go based on those leaders. You know, the bigger the box, the more impact on that market, because again, this is market cap weighted. And if I were to look at a map of the Dow, it would be totally different. It would be based on price, as I said before. Let's see. Yeah, try to see if there's, do I have the Dow 30? There it is. So I can go to the heat map there, if it does. Is it going? Huh. Didn't want to change from that. That's weird. Oh, no, it did. So again, Apple, no, where's UNH? Looking for this. Yeah, there it is. It's not showing UNH. It's showing market cap still. That's why. Should be going by price for the Dow. But it's showing the, yeah, okay, that's it right there. Nope. And that's not showing it either. Yeah, I don't have a premium account, so I'm not going to worry about it. But anyway, you can look at them from different perspectives. But since we're still pushing down on NVIDIA, we're still going to be seeing weakness in the NASDAQ. When NVIDIA bounces, that's when you should expect a bounce in the NASDAQ, and that's when you should expect a bounce in the other indexes. Since the NASDAQ is dropping, remember the weakest market, the Russell, should also be dropping. And if we take a look, this is a 4-hour chart of the Russell. Looks like since the open, go down to a 15-minute chart. You can see initially it took off. I don't know, was the NASDAQ doing the same thing this morning? Let's take a look. Not really. NASDAQ was headed down. That's kind of unusual that a weak market like the Russell would be going up while the NASDAQ, which was the strong market, was moving opposite. But really, with these comparisons and the leaders and laggards, they work better on longer time frames, not on the smaller time frames like this. So if you're day trading, it's not going to be as effective as it would be on a bigger picture. Okay. You can do the same sort of things with other markets. You can do it with currencies to see, you know, which currency is strongest, which currency is weakest, excuse me. So again, if I go here, I can compare maybe euro dollar. Actually, make sure it's doing the right one. I'll use there. Then now you got to be careful, because what I'm going to put in are currencies that have the dollar in the quote position, meaning the second position. Okay, so actually let me do, there we go, pound dollar. But if I put in like the dollar CAD, it won't be right because of it where the dollar is in the base currency, not the quote position. So you can make sure you're comparing these correctly. So Aussie versus dollar. And Do Kiwi versus dollar. And typically what I would do is look at one of these to see, oh, missing one. Oh, that's, no, it's dollar Swiss. It's the wrong way. Dollar yen, all the others are wrong direction. So actually, get rid of that one. There we go. But what I was going to say is that what we need to do is try to compare from a major high or major low in the currencies. So it looks like right around here again in October, around the 25th, we had a bottom. And I can look at an individual chart of one of these to kind of confirm that. But looking at this daily chart, it looks like the Kiwi and the Aussie are the strongest. And the dollar is definitely weak across the board because all of those currencies are moving up. Now, which one should I be trading? Probably the strongest of the strong. Well, it looks like we got kind of a toss-up, pretty close, Kiwi and Aussie. I could literally take a look at those two against each other and trade the strongest. So by doing that, first of all, I'll just take a look to see what the dollar is doing anyway. Indices. And I'm on a 15-minute. Actually, I should have done daily, but this is work intraday as well. Again, looking to trade the strongest or weakest currency. And you can see the dollar is very weak. If I look at Aussie Kiwi, remember those were the two battling out for the strongest. Right now, it looks longer term, Aussie is extremely weak, right? I don't know when those trades were from. So there was a short I had on this a while back. Anyway, clean this up. Take a look. Right now, the Aussie is moving down versus the Kiwi. So the okay, again, apologize for that. Not sure what happened. Keeps kicking me off. It's just on Zoom. So my other internet seems to be fine. Anyway, we saw that the Kiwi was the strongest currency. Dollar's very weak. And typically, if you trade the best versus the worst, remember, you can make money in currency if both are weak, right? Because one might be weaker than the other. But the biggest moves, and by the way, and the same thing, you can make money if both are strong, but one is stronger than the other. But the best way to profit is if one's moving one direction, one's moving the other. So looking at the Kiwi dollar, we should be seeing the best opportunities today on that particular security. You can see on a 1 hour chart, let's see, where's today? If we started off looking at 8 a.m. today, even, we had a pretty good rally there. As a matter of fact, oops, wrong one. Going back here and say a 15-minute time frame from this morning. No, I was wrong. I actually thought that you would have had the best opportunity this morning on the Kiwi, which, by the way, is pulling back, but the Aussie is still holding strong. Remember, that Kiwi was the strongest secure time frame, and therefore should give you the best bang for your buck, so to speak. Okay. So I don't know, Brenda. I mean, like I said, nobody else had a problem with the sound, so I have no idea what's going on. Sorry. It's nothing I can do about it. And well, unfortunately, it wasn't really any great demand zones identified this morning. There is possibly something here if we get a pullback, but I don't know if that's going to be happening before the end of the day. Actually, back already anyway. You see, we had this little bit of a demand zone that was forming, pulled back, and that would have been a nice buy, maybe on a 5-minute. You can see, yep, just missed, hit the wicks. But yeah, that would have been it. And there might have been opportunities on the Aussie as well. But that my point is, again, looking for that leader versus the laggards, you get better trading opportunities. And that's one of the things I typically look for when it comes to even finding in different futures markets what I might want to trade. You can take this out and do an analysis on the different futures markets. So for instance, I could look at crude oil versus heating oil versus nat gas versus gasoline. And even on an intraday basis, maybe we go back to a prior day and take a look to see which was stronger or weaker, and then continuing through. Or if I go to a daily time frame, let me clean up this chart again. Looks like a down slide here, except for nat gas. That was showing a little bit of life. So it's diverging from the others. But basically, again, what I would try to do is figure out where was a major high or low in the price of one of those securities. So crude oil, you can see we started this decline right now on the 24th of November. Actually, I'm sorry, that's a 5-minute. I want to check daily. The slide started back here in September. And really, actually, now this last one started right here, October 20th. So I did it again. Going back, October 20th. And right there, you can see, first of all, nat gas is not following the overall trend. It's much stronger security than the others. But the one that was dragging everything down, which is crude oil, also has a little bit of a bounce on right now. So we'll have to see if we're actually getting a change in trend. And go back over to crude oil. And you can see that we've bounced off an area of demand, possibly. NG is around all-time low. Well, from this period right here, the 20th of October, it hasn't. Again, if you take a look at NG, not NQ, November 20th, because it had already been down. It was November or October 20th? October 20th. So from October 20th, it actually has not decreased as much as the others. That's all. And that's why October 20th was already pretty deep in a move down. It actually rallied before it dropped. So the move from here down percentage-wise is not as dramatic as what we experienced on crude oil. So yeah, even though it is at all-time lows, where it came from that point. So maybe it'd be better instead of measuring from October 20th, because nat gas made a peak in November, maybe we measure from November and they'll show that nat gas is that percentage-wise lower, right? That's why you got to be careful with where you start the studies, because you'll get different data. So right there, beginning of November. And that's exactly as I said. Now it's showing that nat gas is the weakest. But since it's so divergent from the others, maybe we would just remove that, treat it as a separate security. And again, if we're comparing these three, which actually kind of makes sense because two derivative of the third, right? So where crude oil goes, it's really going to drive everything else. Is nat gas going back to 2014 levels? It could, but I don't know if it will. Again, you want to take a look at price and see what price is telling you on a bigger picture. You go to weekly chart first. And obviously we're flattening out right now. We lost our bearish momentum back in February and March of this year. You can see, again, positive divergence. That's very telling. When prices are moving in a certain direction, but the momentum is going the other way, you usually get a pullback. Actually, it was a little bit later here, was this. So right there in May, started going sideways. Well, we rallied up, and right here on the weekly chart, when we rallied, we could not get into bullish territory. High, low, lower high, finally broke our low. If we break 40, which we're right at it right now, we need to close below 40 to start breaking down again. If we don't, we'll just go sideways and bounce. So yeah, if you're asking about this 2014 lows, no, it's way below that. What the heck is this? These are all-time lows. Well, this is it's back adjusted. If you unadjust it, it looks different, obviously. Right? So is it possible to go down further? Yeah, absolutely. But if you're comparing in the back, how those prices were, you should be using the adjusted. If you use the unadjusted continuous, what it's doing is just rolling from contract to contract with no adjustment. And so there's a big debate of which one's best. Either way, we still need more momentum to the downside. So if we go to NGF 2024, which is the correct, actually, oh wait, no, is it? Not NQ, it's NG. I keep doing that. So trade equities too much. Basically, this is the contract you should be focusing on, and you can see that is extremely weak, and therefore, yeah, no problem. This one didn't actually roll over to the new one for some reason on the continuous, but it should be on this contract. And what is this contract saying? Yeah, we are going down, and we should be seeking new lows. Let's go down into smaller time again and just see what the momentum says. More momentum to the downside, we continue to go down. 4 hour. Now we have a bit of a bounce possible, but it's not going to affect the weekly trend. And when I say that we're getting a bounce possible, you can see we made lows without momentum. You need more momentum to make new lows. We didn't get that pullback right now. And since we're getting that pullback, now we start seeing, okay, where's it likely to pull back to? It should try to hit a zone, but if there's no zones there, Fibonacci's the next best. Oh, look at this. We're hitting a zone. Might be done with our pullback right now and getting ready to resume the downward move. Overshot though. So still may try to go a little further, but I think we're going to end up with the week pretty much right here. So by next week, we may actually start continuing to move down to make those new lows. It's kind of what I'm seeing now. So I apologize for some of the interruptions, but I got to get going. It's 1 o'clock. So yeah, the supply, it's been filled, absolutely. But you can see we weren't able to stay up there. There was still enough selling pressure above that area that it pushed it right back down. So it doesn't look like it's going to continue. If you want to hear more about this kind of stuff and watching how we trade this, like I said, you join me in the E-mini think tank. I'd love to have you there. But yeah, we're ending up. Actually, is it done for the day? We should be closing for the day on the futures markets. I'm not sure about the energy. I got to take a look at the holidays. But yeah, if you click on the link, the way I do things is either a monthly subscription or quarterly. And if you ever subscribe quarterly, you get 2 weeks free to try it out. So there's no risk. You can actually sign up next week if you wanted to and just try it all out. And if it works out, great. If not, you get 2 weeks to try it out. Like things, you get full access to all the information anyway. So I'm going to go ahead and enjoy the rest of my weekend soon. I actually still have a little bit more things I have to do, but I want to tell everybody, take care, trade safe, trade well, and have a good one. So yeah, thank you. Thanks for being here, everyone.